Hi, it's Tom Huser with the Huser team. Today I wanted to answer one of the most common questions that I get from my sellers, which is, how much are my closing costs going to be? So here in this video is going to be very detailed for the Las Vegas, Nevada, Henderson, North Las Vegas areas, as every territory can be completely different. In other states, they use attorneys. Here in Nevada, we actually go through the escrow process without the attorneys involved. So this will be very detailed to help you understand exactly what you should expect to pay when you're getting ready to sell your home. My ultimate goal today is to help consumers understand better traditional seller closing costs that you would expect when selling your home. So the first thing that I do want to let everybody know, legally, all commissions are negotiable, and also all closing costs are negotiable. I have broken this out. You'll see closing costs and commissions, so I'm going to talk about these separately. And most importantly, in this video, we are not going to dive into commissions. That'll be another whole video. But you do have to know that commissions are negotiable. That does not mean that all agents are willing to negotiate their commission. And closing costs are negotiable. The best thing to really understand here is about 25 people touch a real estate transaction on both the buyer and seller side, and everybody needs to make money. So all of those could be different providers, but more importantly, as we get a little bit further down here, you're going to see that this is all negotiated also in the purchase agreement. So what I'm going to be showing you today is actually directly from a purchase agreement of where we negotiate some of this stuff. Up here a little bit, you will see, there's things about like the home inspection or pool inspection, who's going to pay for that stuff. So we definitely want to make sure that your agent is, defining this, but more importantly, each city kind of does their own standards, if you would. And that's why I'm saying it is negotiable, but what I'm going to go over today is what I've seen in more than 90% of our closings in the last couple of years. It's pretty common practice what I'm going to go over today, but again, everything is negotiable. So let's get to some of the things that we're going to talk about today. We're going to go through an actual net out, and we're going to explain a lot of these details. So don't get too worried about what these mean right this minute, because I'll get into that in a minute. But here, this is the purchase agreement that's agreed upon between buyer and seller. So this here shows the escrow fee that would be paid 50-50, the real property transfer tax, and I'm not going to go through all these, but this is where this is defined, so if you ever want to pause the video or come back. And then as we get a little bit further down, this is like where the home protection plan is, you'll see that, and then that out that we're going to do, this particular case, it shows the seller paying $450, and CIC. So there's a couple names that are, this is Common Interest Community, or better known to most consumers as the Homeowners Association. I'll be referring to it as the HOA. So we'll get into all these, but these are also spelled out in the net out that we're going to go over below, and who's going to be paying these fees. So again, what I'm going to be showing you here is going to be very traditional for a lot of majority of sellers throughout the market. Today I'll say that why I'm making this video, it is actually a seller's market this moment. So sellers are paying about the least amount of fees in today's market, and these fees should only grow greater when it actually switches to a buyer's market and the buyers try to shift more onto the sellers. And what I will say is you'll see that this example right here is for a $300,000 house sales price. And I'm not going to go through every example, but I did want to create a couple others so you can pause the video at certain areas and kind of read through it. So this one here is an example for a $500,000 house. This one here is an example for an $800,000 house. And this one here is the example for a $1.3 million house. Now, what I do want to mention is you'll see in my first example that I'm going to go through in detail that they did not, I only have one homeowners association, but as you get more expensive homes, it is very common to have two homeowners associations. And the other thing is too is, lower dollar homes sometimes don't have a pool to where the more expensive homes typically do. So I did adjust the home warranty throughout this also to represent larger homes, more air conditioning units, bigger roofs, more advanced pools. So I really want to say that these are, in my opinion, very real world examples that I see, constantly in today's real estate market. So let's go back to the example for the 300,000. These are really all the same. And our example today is this is going to be what's called the seller's net sheet. This is assuming that they have a conventional loan on their house. Now, the loans do matter, VA loans, FHA loans. When you're a seller, they're handled in a little bit different way, but it's not going to be much different than this. So this is 98% close to just about, everything that's going to happen out there. And again, this is a proration date of March 15th. The year doesn't really matter. What I did here is I wanted to close in the middle of the month, and we'll get into that in a minute. And I'm showing the balance here of a $300,000. What the owner owes on the house currently is $220,000. Obviously, your situation would adjust based on this. So let's get into some of these fixed closing costs here. And I do want to show you just kind of a little thing down at the bottom here. It says this estimate is provided for informational purposes only. So here's what I want to say. As we get into this, these are very much so estimates, and here's why. These homeowners associations that I have in here, there's hundreds of homeowners associations throughout all of Las Vegas, Henderson, and North Las Vegas, and all their fees are different. So all as I'm showing you here is pretty much what I've seen as the average throughout hundreds of transactions. But these again are just estimates. So let's talk about the seller should plan on paying what's called an owner's title policy, or otherwise known as title insurance. So the estimate for this is right around $1,500. So let me tell you what this is for. So title insurance. At any point along the chain of ownership, problems may arise that could cast a cloud over a title, putting a claim of ownership in doubt. It protects your claim to your property from potential problems caused by irregularities or fraud that may have occurred in the past. So the reason the seller would pay something like this is because they want to give clear and equitable and kind of warrant the title to the new buyer against any past claims during their ownership period. Escrow fees. So escrow is a disinterested third party that holds the legal documents and funds on behalf of the buyer and seller and distributes them accordingly to the buyer's and seller's instructions. They also pay off any lien holders to protect buyers and sellers and pay any third parties in the transaction like real estate brokers, taxing authorities, or other parties with interest. So essentially this fee here, this $430, and as you saw up in the contract above, this is only 50% of the fee. So they're really charging $860, and this is typically split between the buyer and seller because it's handling all parties' money. Now, again, they're handling hundreds of thousands of dollars coming in and going out, bringing in new mortgages, paying them off, paying all the agents. There are situations where, there's a divorce and the husband or wife is due X amount of dollars at the closing. So when this happens, rather than, the husband or the wife getting all the money and then the other one has to worry about the money coming through to them, the escrow company will handle all that, and they'll make 2 separate wire transfers just to make sure that there's no issues. So there's a lot going on there. They're paying off all the seller's loans. So if you have a loan, say with Wells Fargo, they're going to pay that off, and they're going to show that. If you have any contractors' liens or anything against the property, HOA liens, they're going to make sure all that stuff is paid off so the new buyer is getting clear title to the property. So this stands for the real property transfer tax. So here in Nevada, every time that a house sells, and we definitely deal with Clark County in our area specifically, you have to pay $5.10 for every 1,000 of the sale price. So if you were to take this 300,000 and multiply that times $5.10, you would get this number here, and that is obviously going to the government as a tax. Okay, interest. So this is your current mortgage. So, when we met at the listing appointment, you said that you owe $220,000 on your house. So this is showing you that your payoff is always going to be higher than your balance. And this throws a lot of people for a loop, because most people, when we first, got into living on our own, we rented rather than buying. So the thing is interest is always paid in arrears. So what do I mean by that? This interest here, if we look at this closing date, is from March 1st to March 15th. So this $497 is going to pay this 15 days of interest. And then people will say, well, hold on, I just made my payment on March 1st. Yes, you're correct, you did. The payment that you made on March 1st paid your February interest. So this now is paying this March interest while you're still in the house. Okay, so now we move into the homeowners associations. I would say that probably 9 out of 10 homes that we sell in Las Vegas have a homeowners association. So with every homeowners association, there are 3 fees, and sometimes there's a 4th, but again, I'm trying to go on the averages. And so this is what is called a homeowners association resale package. So what this is we contact, when I'm selling your home for you, we get a hold of the homeowners association and we get something called the resale package. So that is typically somewhere between 200 and 500 pages long, and that has all the covenants, conditions, and restrictions that we have to provide to the new buyer that is going to buy your property. So this is required by law, even though, you say everything's negotiable, but this is required by law to be paid by the seller and given to the buyer in any transaction. And from the day that the buyer gets this document, they can cancel this deal within 5 days with no questions asked. So it's very important that we get this ordered early on in the process. Now we have the demand. So the demand is completely different. This is something that the escrow company, this company up here, as part of their service, they reach out to the homeowners association and they ask for some sort of proof of payment to prove that the account is up to date, many times saying that there's no existing violations on the house, because the escrow company is a neutral third party and they need to make sure when the new buyer takes over this house that there's not any outstanding issues with the homeowners association. So these are 2 completely different things. Finally, we have the homeowners association transfer fee. So this is the fee that the homeowners association charges to transfer from the existing homeowner to the new buyer. Again, these are estimates. I've seen these as low as $50. I've seen these as high as $500. The reason that these vary is because each company is allowed to charge their own. It depends. Do the documents just come paper? Do they come electronically? Is it a gated community or a guard gated community that there's remotes that have to go to open the gates, and there's a deposit fee going down with that? There's also another fee, like in a popular, there's what's called a capital contribution fee, and I did not put that in here because it's not common that we see that. But for certain subdivisions like Sun City Summerlin, there's like a $1,400 capital contribution, otherwise known as the NORA fee, and that's required to be paid. A lot of times in today's market, that's negotiated that the buyer is paying that. Again, it's a seller's market right now, and that could probably shift, when we go back into more of a buyer's market in future years. So I don't want to put that in here right now, but there are also something called capital contribution fees that we see on occasion. So next, home warranty to buyer. So in about 80% of the transactions, we do see that the buyers are asking for a home warranty. And I want to make sure you're clear, this is not homeowners insurance. This is not State Farm or Farmers or Allstate or anything like that. This is something that is going to cover the mechanical items in the house, or something like if the roof was to get a leak, or the plumbing has an issue. For the first year after the buyer buys the house, they kind of want this policy because there's a small deductible, generally $75 or $100 if something major happens with an air conditioning unit or something like that. In this case here, I put this amount, about $450 on average, is what we see for a normal home around this price of $300,000 with no pool. So obviously, if there's a pool and spa, this price goes up because there's more stuff to now cover that can break with pool motors and, you know, yada yada with all that. And in my future ones that I kind of scrolled over before, you'll see that I increased this value here. I start adding 2 homeowners associations on the expensive homes. Again, these are all estimates, so I want to be realistic in the transactions. I did forget to mention that, you know, the escrow fee is not a percentage of the sales price. There's like a minimum amount and then it goes up nominally, you know, by each price. So I can't say that there's a flat amount exactly in there. You know, this interest is going to change based on, you know, how much money you owe on the house and what the interest rate is. That's, you know, but it doesn't change by that much. And then so real estate broker transaction fee. You know, this is definitely a pretty common fee that you'll see in the marketplace now that most brokers are charging. And, you know, this is sort of like, you know, you go buy a new car and, you know, you're paying X amount of dollars for the car, and then they have their dock fee that they charge you. There's the, you know, fee when you go to a hotel amenity fee to get the Wi-Fi and the use of the gym and everything else. This is very common, you know, to see additional fees in just about everything that you do. You activate and buy a new cell phone, they charge you an activation fee. And this is really with all the legal requirements now of storing paperwork for 5 years for the real estate division and all the people that it takes to do that. There's just a lot of paperwork, as you'll see as you get through the transaction, that just has to be managed and stored for many years to satisfy many divisions. So, and then this is where the real estate agent's commission is broken down. I do like to separate these to the buyer's broker fee and the listing broker fee. So just a quick explanation of this. Some sellers don't understand that it's pretty traditional, and when I say pretty traditional, I've never seen a transaction that this hasn't happened, but again, everything's negotiable, that the seller is paying both the buyer's agent commission and the seller's commission. They pay both. I break those down so that you can understand and see that, and these actually could be 2 different numbers based on the negotiations that you do with your agent and what's common to be paying the buyer's agent at your price point at that time of the market. So again, I wanted to kind of scan through these just a little bit more so you can see these other price points at $500,000. Put a couple of homeowners associations in here, added a pool in, and because this is an $800,000 price point. And there is something also that's going to be called prorations. So for this particular one, you know, I didn't want to get too in detail on this video. This prorations typically help a seller. So if you've paid for this one, it shows taxes. So that means you have already paid your taxes through the rest of the quarter. So you're going to get a refund on those taxes that you paid in advance at the closing table. And this could also be for homeowners associations. I've seen very extensive situations here where the seller, you know, has the house paid off and they've paid the homeowners association 2 or 3 years in advance. They paid their taxes a year or 2 years in advance, and these numbers can get really large. And it's very beneficial to the buyer, but it can make it very difficult it's beneficial to the seller, but it can make it very difficult to the buyer if they're kind of squeaking in and not coming in with a lot of money, but these prorations really affect them. But these don't affect the seller too much, so I don't want to spend a lot of time on that. So hopefully now by, you know, reviewing the net outs and seeing all the different price points, hopefully you can find one that, you know, is as close to your situation to give you a ballpark idea. But, you know, if you have additional questions, definitely please feel free to call me directly. I can get those answered for you right away. And more importantly, when I send my sellers the listing agreement, I actually give one of these net outs in there so that they can see where all the details are going, because it's very important that when we get the first offer in, we want to be able to compare and contrast versus the original net out that we started with. Thanks for watching.